Hello, let's get started. So today we are going to solve paper for the International GCSE Accounting, which is January 2023. Okay, getting it? So it is
Yeah,
basically, sir, January 2023, and this is paper one for the Edexcel 4AC1 accounting. So as we can see, we have some sections here. We have section number A on MCQs, and then we have section number A, and then we got to section number B as well. Okay, understood? Got it?
o-
So our first target will be to do section number A. Okay, understood? Me following. So what
yeah,
does this paper says? Answer all the questions in this section. Write your answers in the spaces provided. Okay. So what we have to do, sir, is basically let's talk also about paper one. So the total mark for paper one is 100. Okay. So the total mark for this paper is 100, and the time we have is basically 2 hours for this paper. Okay. So it's a bit more time. They give 2 hours for the paper, and total mark for this paper is 100. Okay. Understood? Got it?
yeah,
So we have to try to get the full 100 marks. Okay, so here we go. What we have to do, sir, the examiner is asking for questions 1 and 10. Can you hear me right following? For
I,
questions number 1 till 10, we have to choose the correct answer A, B, C, or D and put a cross in the box. So whatever your option is, you have to put the cross in the box. If you change your mind about an answer, put a line through the box and then mark your new answer with a cross. Okay. So we have to mark our new answer with the cross. And if we change the mind, then we can just put a cross as well. Okay. So let's start getting it falling. So
yeah,
identify question number one says identify which statement is incorrect. Okay. We need to identify which statement is incorrect, not the correct one. Okay. So it's very simple. For 1 mark, sir, it will be we already know the original equation is assets is equals to capital plus liabilities. Getting it? Assets is equals to capital plus liabilities. So this equation is correct. Understood? This is not the
yeah,
answer. The basic accounting equation is assets is equals to capital plus liabilities or equity plus liabilities. Similarly, equity will be equals to assets minus liabilities. This is also correct. And equity minus liabilities and liabilities is equals to assets minus equity. This one is also correct. So the C1 is wrong. The C1 is the answer, student, and we'll put a cross in the box. Okay, understood? Got it? Clear?
yeah,
So one should be C answer because assets will be equals to capital plus liabilities. Okay, assets are equals to capital. Are you getting it with me following? Assets
yeah,
is equals to capital plus liabilities. So because they are subtracting, this one is the wrong MCQ. Okay, this one is the answer for us. That is one will be C. Okay, got that. So I put a cross mark over there. Okay, clear on that? Sure about it? Should not be a confusion. Got that?
yeah,
A, B, D, and correct. A, B, D are correct. And moving forward to question number two. Okay. Question number two talks about, sir, identify which of these accounts. So identify which of these accounts will always have a credit balance. Okay. We have to identify which of the accounts always means like the nature remains credit. Okay. The nature of this account will remain credit. So I'll give you a couple of minutes to think about. Let me know what will be the answer. Carriage inwards, carriage outwards, discount allowed, and discount received. Yep. What's the answer? Think about it.
is it discount received?
Exactly. Very good. So we need to understand, students, that carriage inwards is also a debit balance nature. Okay. Carriage inwards is basically, we have talked about, carriage inwards is basically the cost of bringing the raw materials to the manufacturing unit, manufacturing process. So it comes in the trading section. It will come in the trading section. It's an trading section. It comes in and it's called an expense. All of these are expense. Discount allowed, carriage outwards are expense because these are debit nature, and discount received will be the credit nature because it is the only thing that is not common. It is income. So our answer will be 2D. Okay. Understood?
Yeah,
Good job. And I've done provided the explanation as well. Okay. So
okay.
discount receive our answer for 2 part D. Okay. Clear on this? Any problem?
No, sir.
Moving forward to question number three on the first page, identify which is a reason for offering a cash discount. So why do we offer a discount allowed? Why do we offer a cash discount? What is the reason? So they are asking that tell us the reason for offering the cash discount. So what will be the reason for cash offering a cash discount? If you are paying in cash, is it the reason for the cash discount? No. Okay. So paying in cash is not the reason for discount allowed. Paying promptly is the reason for cash discount. Yes. So always remember that you get the discount. Why companies will offer cash discount or why owners will offer cash discount? Only because if you are paying them very quickly so that they don't have liquidity issues, their cash management is good, their working capital cycle is good. Understanding? So that is why we need to understand here that it's not about when we are purchasing in bulk, it is basically trade discount that is offered. Okay, getting it? Do make sure remember it. When you are buying in bulk quantity, when you are purchasing in bulk quantity, you will be offered trade discount. If you are regular customer, you will still get trade discount, not cash discount. Understanding? Hello, got
Okay.
that?
Yeah.
So these are also not the reasons. So sir, B is the reason. So put a cross mark over there. Okay, understood? Got that clear? So B
Yeah.
is the answer. When you are paying promptly, you will be, it is the reason for getting a cash discount. Okay, so page number 1 with 3 MCQs we have talked about. We have tried to solve them and understood them as well. Okay, got that clear? Following.
Yeah.
Next, we move on to question number 4. If you want to take a screenshot, you can quickly take the screenshot as well for revision purpose later on. Done.
Yes.
Next we have is basically 4, that is inventory. Inventory should be valued at the lower of cost and the net realizable value. Okay, so inventory should be valued at lower of cost and the net realizable value. So it will be at the lower of cost and net realizable value. Identify which accounting concept is this an application of. So which accounting concept will explain that inventory should be valued at lower of cost or a lower of cost and net realizable value. So we need to understand that accruals concept is not possible. Why, sir, accrual is not possible? Because accruals concept is basically when we talk about okay, the expenses and the revenues should be matched for the current year. Whatever income and expenses you have incurred during the year, they should be written down in that current year financial period. Consistency concept is also not possible. Why, sir? Because consistency concept says that every method, whatever method you are using, you should use it for a lot of years. You should not be changing your accounting policies, accounting procedures. You should not be changing your accounting procedures and policies each year. There should be consistent policies. So that is, it is not linked with this. Similarly, money measurement concept is also not possible, sir. Why? Because money measurement concept states that if you cannot value any item, if you cannot quantify the value, then you cannot record it. For example, it is goodwill that you can't record in the business because you cannot measure it. Anything that is, you cannot measure the competition in the business. So that is why these are money measurement, is that only those things will be recorded in the accounting our books which have a monetary value. Okay,
Okay.
you will record only those values, those items which will have a monetary value. Non-monetary value will be not recorded. Therefore, sir, we have prudence concept left, and the answer is for this is prudence concept, because prudence concept states if you are expecting any losses and anticipated losses, you should record them quickly firstly. But if there's going to be any gain, you should only record when the gain happens. Okay. So the answer is prudence concept part D. Prudence concept also takes into account the inventory thing, that inventory, if the cost is lower, you should record at that. Or if there's any damages, so inventory should be recorded at NRV, that is selling price minus estimated packaging cost. NRV is basically the selling price minus estimated cost. Okay, understood?
Okay.
Estimated repairs cost, estimated packaging cost, repairs, those things. Okay, so whatever is lower, whichever value is lower, you can record it that value. Okay, understood? Got it?
Yeah.
MCQ number 4. MCQ number 4, got it, sure. Next, we have, sir, question number 5, which talks about identify which is not a principle of professional ethics. Okay, so which of them is not a principle of professional ethics? Let me know. You want to make a guess for this or try this and let me know if you know the answer for this.
Mm,
Confidentiality, is it a professional
Materiality.
ethics? you can do elimination procedure. Sir,
Oh,
confidentiality is a process of professional ethics, integrity also. You should be honest, you should be truthful in accounting when you are recording things. So you should be showing integrity, honesty. Confidentiality is you cannot show the information, you cannot show your accounting records, you cannot show your transactions to other parties, okay, to third parties. You need to keep it confidential, private information, and your objective should be clear. Materiality is an accounting concept, which I believe materiality is accounting concept, not a professional ethics. Okay, understanding materiality is an accounting concept. So I think you said the C answer, right?
yeah.
So C is the answer here. That is 5C, that materiality is the accounting concept, not a professional ethics. While objectivity is basically the objectives should be clear. What you have to do, what is your job, what is the job of the auditor, what is the job of the what is of the director, what is the job of the partner. So objectivity should be there. That whatever figures are being there should be quoted that. So you need to. It's one of the ethics, the objectivity. Okay, that it should be obvious what you are doing. Okay, clear on this?
Yeah.
And materiality is a basically an accounting concept. Next, we move forward. So we will have to face that it will be at just question number 6. Identify which item. So we have to identify which item. Getting it with me following. Identify which item should be entered on the credit side of the trade payables ledger control account. So it's all about format discussing. If you know the format, you can do what will be coming on the purchase ledger control account or trade payables ledger control account. Okay, what will be coming on the credit side of the purchase ledger control account? What will be coming on the credit side of the purchase ledger control account? Getting it clear?
Okay.
So what will be coming on PLCA credit side? Always remember cash purchases, they don't even come. Or every transaction on cash doesn't come in. Uh, Not possible. Cash purchase is not possible because trade payables ledger control account, trade payables, or you can say purchase ledger control account is not possible. They don't come in this. What we need to understand credit purchases, if you remember the format, try to bring the format in your mind and try to recall it. That's where credit purchases comes on the credit side. Understood?
Okay.
Getting it? Then you have
Yeah.
discount receive and return outwards. So we have to think about them. What will be coming on the credit side? Okay, exactly. So this is the answer. Credit purchases will be coming on the credit side. Why? Because sir, discount receive comes on the debit side and return outwards also comes on the debit side. Okay. So they are part of it. Discount receive and return outward will be part of the control account of purchase ledger, but they are coming on the debit side. Only credit purchases will be coming on the credit side. Understood? Got it?
Oh,
6. Complete
yeah.
explanation. Got this clear? Understood?
Yeah.
6C. Got it? 6B is the answer. Okay.
Yeah.
Moving forward, we have, let's see if you can do 7. I'll give a couple of minutes to think about 7 and let me know the answer for 7. C35C, materiality and money measurement. Think about 7. Question number 7. Okay.
Is it D?
Let's check. Let's have a look at it. I'll give you a couple of more seconds to think about it. Okay. So question number 7 talks about identify why a business will depreciate a non-current asset. So why the business will depreciate a non-current asset, sir? So we need to know it's simple. What will happen? Why we are doing the depreciation for a non-current asset? So it's basically to spread the cost of its over its expected life. So it's definitely the answer. Okay, understood? We have to spread the cost of the asset over its expected useful life. It is not, these are just he can to provide. It is not possible. There is no, because the depreciation is a non-cash item. Depreciation is a non-cash expense, so there is no perspective of cash here. There is no need of cash here to know the profit or loss on disposal. That is not the reason why we are doing it. Profit and loss is a separate thing. Okay, getting it. Profit and loss is a separate thing. We don't do it for this purpose. And to know the value, it's not like that. The value at the end of the useful life can be 0 as well. So the answer for 7 will be D. Got that clear? Move forward.
Yes, sir.
So we have done 4, 5, 6, 7. Let's talk about question number 8 now. 8 talks about that we have, sir, return inwards. We have return inwards of $150. It was posted to the credit of the return outwards account. Identify how this transaction would be corrected in the books of account. So we have to now correct the transactions, okay? We now have to correct this transaction. So I'll give a couple of more minutes to think about it. We have return inwards, which is a sales return, okay? So how do you go about this, sir? It will be simple that we have, sir, sales return. Sales return should be recorded where? Are you getting it? Sales return, return inwards is basically sales return. When you do sales, sales are recorded on the credit side because they are income, right? When you do
Yeah,
sales, sales is basically a revenue item and the nature is credit. So sales is recorded on credit. But when the customer is returning, that is called return inwards. When the customer is returning goods or there are damages or something for any reason, sales return means that the goods are returning back to the owner. What we need to understand, students, that sales return should be debited, which means that we should have done return inwards debit. So either A is the answer, C is the answer, okay? Both, otherwise it's not possible. So I'll skip getting it. I'll skip basically B and D. Are you getting it? Because return inwards need to be recorded on the debit side. Are you getting it? So return inwards is only coming in A and C. So it will be either A or C. Are you getting it clear?
yeah,
Following? So now what they have done is basically they have, instead of sales return or instead of return inwards, sir, they have recorded in on the purchase. If they have recorded this in the purchase return or the return outwards. Okay. So they have recorded this in purchase return or the purchase return or are you getting it? Purchase return they have recorded in. So what we need to understand, the return outwards, they have made it in the credit side of purchase return. Are you getting it?
yeah,
What the mistake the accountant have done, they have, instead of return inwards, they have credit return outwards. Instead of return inwards, they have credit return outwards. So there is no need of return outwards. So sir, we are going to flip it back. If they have mentioned return outwards on the credit side, to finish this, to balance of the account, if they have return outwards on the credit side by $150, to finish this off, I will put return outwards on the debit side to finish this off. So therefore, A will become the answer, because on the credit side, you will have to put suspense account because of the error that is affecting trial balance. Understanding that?
yeah,
So A will be the answer. Return inwards will be debited. Return outwards will be corrected. So it will have to be debited, and suspense account will become credit. So sir, the answer is A. Got this one? This one is a bit tricky. Okay, so see if you got this.
okay,
Let's wait. Let's take 3, 4 seconds to absorb this. Hope everyone gets this. I'll repeat my point. The point is basically that sales return should have been debited, which is return out inwards as well. So sir, return inwards we had to record on debit, but we didn't record. So first thing will be, we will record return inwards on debit. That is part one, return inwards on debit side. The second thing is the mistake that needs to be corrected. What is the mistake? There is no need of return outwards. There is no need for return outwards, but by mistake the accountant have done it. Accountant have credit the amount of $150. I'll repeat, accountant have credit the amount of $150 in the return inwards account. So we need to finish that account. We need to close that account. There is no need for that account. So that is why, because accountant mentioned 150 credit on the credit side, I will make it on the debit side, return outwards account, debit by 150 to balance of the account. And therefore, because this is an error affecting a trial balance, so suspense account will come on the credit side by $300. Okay.
yeah,
Got that? Sure, no problem. Clear on this? Right? Sure.
yeah,
Moving forward, sir, we have just question number 9, which says identify which error. So we have to identify, sir, which error would be disclosed by the preparation of trial balance. Okay. So we need to, which error will be disclosed by the preparation of trial balance. We need to work it out, that which error will be affecting the trial balance. Okay. I hope everyone knows error affecting the trial balance. So we need to work out which error will be affecting the trial balance. Understood? Got
yeah,
it? So yeah, which error will do it? Let's have a look at it. For this case, you have to read all the You have to read all the questions. Okay, so credit sales of $500 entered on both sides of the ledger as $50. So there is credit sales $500. Getting it? Credit sales are of $500, but it is entered on both sides of the ledger as $50, which means debit will equal to credit. So this will not affect the trial balance. Getting it? In A option number A, the debit side and credit side both have $50, which means it will itself cancel out. So this error will not affect the trial balance. Okay, understood?
Yeah.
Similarly, if I read this, purchases on credit are omitted from the books. Always remember this is what an error of omission. Error of omission it is that when you omit some transaction, this will also not affect the trial balance. Understood? Got it?
Yeah.
If we talk about our adjustment number C, let's try to do that. Purchases account and sales account both were the overcast. So this is also not affecting the trial balance, sir. Why? Because purchases account is greater by $650 and sales account is also greater. So the debit is also greater by 650 and credit because sales nature is credit, right? Sales account credit
Yeah.
nature, purchase account debit nature. So both of them will balance off. This will also not affect trial balance. So which is left, sir? B is the answer. Why? Because discount allowed of $60, it is posted. Discount allowed is an expense, but it is posted to the credit side of the discount allowed account. So what it simply means, कि sir, one of the expenses is treated as an income. Are you getting it? So आपने
Yeah.
expense को what you have done, sir, is basically treated expense as an income. That is why the answer will be 9B. B answer, B will be the option. Okay, got that clear?
Yeah.
Sure, no problem in that. Any questions, any issues?
No.
Clear on that? No problem, right?
No.
So question number 9 is done. 8, 9 we have done. Let's talk about question number 10. Okay, understood? With me following clear on that?
Yeah.
So what we have next is basically how income received identify how income received in advance would be shown in the statement of financial position. So we have to identify how the income that is received in advance will be shown in the statement of financial position. So first we need to understand what is income received in advance for the company. What is income received in advance for the owner? So if we are receiving income in advance, are you getting it? If we are receiving income in advance, we need to understand that the customer have already paid for it, but we haven't provided the service to it. Okay, we haven't
Oh,
provided the benefit or service to it, the customer. So it is basically what for us? It is basically a liability for us. First you need to define whether it's an asset or liability. So it's a current liability for you. Getting it? So I
yeah.
hope this is clear. The income that is received in advance means that the customer have paid the amount, but we haven't provided the service yet, and that is why it will be called a current liability, as well as it will be show current liabilities section in the heading of other payables. Understood? Getting it
Yeah.
clear? Current liabilities and other payables. So 10 answer will be C. Okay, got that?
Why is it other payables?
Yeah, because we have to make the payment now. Are you getting it? Like it
Oh,
is, we have to provide the service against it. It's a liability on us. That is what will be current liabilities. Okay,
okay.
and we have to make the payment for this.
Okay. Yeah.
Prepaid expenses and income that is accrued. Yeah, this income is already received in advance now. So it's a liability on us. Okay,
Okay.
it's a liability on us.
Okay.
Sure, got it? Any problem? Understood? Any
Yeah.
questions? Any issues? Clear on
And
this?
yeah.
Okay, so next what we have, once we are done with these 10 MCQs, we still are on section A, okay? So section A and section B we have, okay, getting it. So let's try to complete section A, which is question number 11. We have to complete the document, book of original entry, and total marks for section A are 25, okay? Understood? So our target is basically that we try to get the section A that is 25 marks and section B will be of 75 marks. Okay, understood? Got that? Clear? Following with me?
Yeah. Yeah.
So let's try to complete this. Question number 11 is for 5 marks. Here we go. Let's start working on this. There's an invoice, okay? Are you with me? This is invoice which of J-Day Limited, Langton Drive. So this their address, the company address is given. This is a bit basically an invoice. Invoice number is given, the date is given to us, sir. How much, what is the name of the shop they are trading with, okay? The customer information is given, okay? So what they have taken is basically eight quantity amount is eight. They have taken eight bookcases, okay? Unit cost is $28. So just have to find out the total cost, okay? Understanding? So what is the invoice for bookcases? One unit cost $28 for bookcase, and they have taken eight units of that. So it will be so simple. $224 will be the cost of the uh, invoice cost. Okay, understood? Getting it clear? Hello?
Yeah.
And you can write it like 224.00 as well because of this zero. Otherwise, you can just still give 224 and get full marks. Okay. Similarly, there are table lamps. So table lamps cost 6.5 each, and the quantity that has been done is 24. So it will be 6.5 into 24. So I'm getting it as $156. Got it, guys? Clear? So 224
Yeah.
plus 156 is basically $380 is the subtotal of invoice. $380, and there is being trade discount given, and we already know the reason that trade discount is given based on buying in bulk quantity, or you can say the trade discount is given for the perspective of, are you following with me?
Yes, sir.
Trade discount is for, sir, $76. So trade discount is $76, sir. Subtracted. So eventually total invoice value will be $304. Okay. Got that clear?
Yeah.
Simple question, right? Understood?
Yeah.
$304. Okay. Got this? Any problem? Any question? Let me know.
No, no.
So we got $304 as the answer for the total value, the invoice after the trade discount. Okay. Next we have to question number 12. We have done 11 already, now 12 and 13. Complete the table to show the book of the original entry for each transaction. Complete the table to show the book of original entry for each transaction. So for 5 marks, we have to see purchase of a non-current asset on credit. What will be the book of original entry? Received from customers by a credit transfer. So let's try to work it out. Got it?
Yeah.
Purchase of non-current asset on credit. So what is the purchase of non-current asset on credit? If you are purchasing a non-current asset on credit, it will be coming in the journal. Okay, getting it? This will be coming in the general journal. Okay, understood? So you can write the
Yeah.
word of journal as well, or you can write down the general journal, but better to write both word of journal as well works. Okay, got that clear? Okay.
Yeah.
Then you have got a receipt. Come on, which full book of prime entry will be? So always remember there are six books of prime entry: purchase journal, purchase return journal, or which we can call it return outwards journal, return inwards journal, return sales journal, cash book, and journal. Okay, so these are the six types of books of prime entry that we can be tested on. So what is it? What about receipt from a customer by a credit transfer? So customer have paid by the credit transfer. Okay, customer have
Yeah.
paid by banking transaction. Customer have paid any transaction which involves cash and bank will be through cash book. Okay,
That's
understood. So second answer will be cash book. First answer is journal. Second answer will be cash book. Got that clear?
what type of transactions will come in the general journal?
Journal, all the transactions that are not involving cash and bank, okay? All the transactions that are not involving cash and bank, and the transactions that are not of goods. Are you getting it? So this was
Oh,
non-current asset on credit, okay? Understanding. So credit is not a cash book thing, and it is not a good. When we talk about goods, whatever your trading business is, the goods, like all these three, so all the second, the third, and the fourth adjustment, they are involving goods. So that's what we need to understand. If it, apart from the goods, the like irrecoverable debts, any non-current asset on credit you have purchased, these are all journal items. Okay, journal transactions. Okay, clear on that?
yeah.
Sure. So we
Uh,
have return of goods. We have return of goods to a credit supplier. Okay, so we have return of goods to a credit supplier. Now the return of the goods to a credit supplier is basically that we are returning goods to a supplier, to a supplier. So it will be return outwards journal, okay, or purchase return day book, purchase return, purchases return journal, or purchases return. Are you getting it? Purchases return journal, return outwards. All these names are okay. So purchases return or purchases return journal, we can say,
Yeah.
or we can say day book as well. Okay, some people call it day book as well. So you can go for that as well. Purchase return day book. Got it? Clear on that?
Yeah.
If you sell any item on credit, if you sell any item on credit, it will be recorded in the sales journal. Understood? Simple, right?
Yeah.
Okay. If I change the question, say cash sales. If you are doing cash sales, then the answer will change. Anything of cash item will be recorded in the cash book. Okay. Got it?
Oh, yeah.
What about this one? Small cash payment to a window cleaner. If you are making a small cash payment to a window cleaner, it will be simple, very easy. Come on.
Cash book.
It will be a petty cash book. Okay, when the payments are small, it will be called a petty cash book. Petty cash book is also a book of prime entry. Okay, understood.
Okay.
So this will be in
Yeah.
the petty cash book. Okay, got that clear?
Yeah.
So we have solved question number 12 as well. I would like you to take a screenshot and try to memorize and remember it. Okay, understood? Getting it clear with me?
Yeah.
Sure about it? No problem. No confusions.
No.
Moving on forward, we have question number 13, which is also part of section A for 5 marks. In order to get the complete 20, in order to get the complete marks, we need to do this. So let's try to do question number 13 as well. Getting with me, following? So it will
Yeah.
be on 1st September 2022. So what we have, sir, is on 1st September 2022, 1st September 2022, Umar owed Reese a credit supplier $840 during the month of September 2022. It's a book of original prime entry question. The following transactions between them took place: purchase goods, return some goods, paid in the closing balance. So what we have to do is prepare the account of Reese in the books of Umar, okay? So
Okay.
you have to think yourself as Umar and you are making the account of Reese in your accounting books, okay? Getting it clear? We have to
Yeah.
make prepare the account of Reese, prepare the account of Reese for the September 30th September and bring down the updated balance. And these things we have to do for 5 marks. We have to make the Reese account. Okay. So what we need to understand is very careful and very quickly. First thing it should be, is Reese a customer or a supplier? Is Reese a customer or supplier? Come
Oh,
on. You can read the question. Umar owed Reese, a credit
fire.
supplier, $840. It's in front of us written that
Yeah.
Reese is basically a supplier. So it's basically a liability. It's a trade payables. Okay. So it's a trade payables account. Payables liability means what? Credit nature, right? So always remember that, sir, balance brought down will start on the credit side. Okay. Understood?
Yeah.
So here we go, sir. Balance brought down on credit side that at the start of the month, $840 Umar owed Reese. Umar have to pay. Who is Umar? Umar is us. So we have to pay Reese at the start of the month. Understanding? At the start of the month, we have to pay. At the start of the month, we have to pay Reese $840. Okay, got this clear? Sure about it? No problem.
Yeah.
Clear on that? The next thing will be, when we have talked about that, we should be clear about, okay, we have got balance brought down as 840. Now purchase goods. So purchases goods. So on September 5th, they are purchasing goods. So what will happen? Purchases in itself account will become debit, and in Reese account, purchases will become credit. Getting it? So purchases day book on September number 5, you will give him more purchases. So $640 on the credit side again. Okay, just need to
Oh,
make sure you know about the just make sure you know about those adjustments. Okay, the double entries. Okay, purchases debit in their account, and Reese will become credit in his account.
yeah.
Reese credit by six forty
Yeah.
dollars got this clear? Must know this.
Yeah.
Okay, second will be, now Reese is returning some goods. So if purchase are coming here, definitely return of the goods will be coming on the debit side, right? So it will be on September 17. he returned goods. So it will be purchases return day book or purchases returns. Getting it clear?
Yeah.
So if you want the adjustment for this, it will be simple, sir. Reese will be debit now because Reese account will be debit because he is returning the goods by $190 and purchases return will be credit, okay?
Yeah.
Because the nature of purchase return is credit nature, okay? So I'm
Yeah.
doing double entries for you, although they are not required, but I'm doing it so that you understand clearly, okay? Following,
Okay.
double entry is not required, just understand. Then on 28th September, he paid in full the balance owing at 1st September. So the balance owing at 1st September was $840. So Umar, who we are Umar. So we have paid him the full balance at 1st September of $840. So when we are making the payment, our bank will become credit and Reese account will become debit. So here we go, sir. It will be $840. Follow in the $840 we are paying through bank account, okay? Through bank,
Yeah.
cash book or bank you can write down. That is it. On this is on September 28th. And now you will have to close the balance. So you got 4 marks up till now: 1 mark, 2 mark, 3 mark, and 4 mark. Got it? And the
Yeah.
last fifth mark you will get it by doing the closing of that. It's because it's a liability account, so it will be balanced. That will be 840. You can just close as well first. Do the balancing, okay? 840 plus 640. Write it down here as well. Understood? Getting it? It will be 840 plus 640, which will be in the calculator 1480, and subtracted 1480 minus 840 minus 190. So I'm getting 450 as the balance carried down. Okay, understood? Got that clear? Falling.
Yeah.
So it will be balance brought down for the next month. Balance brought down for next month will be 450. That will be sir on 1st October. Understood? This will be at the end of your September 30th. Getting it? 1st October. So that is how you will get it. And this will be full marks with this if you do it. Okay. Understood? Got this clear? Fifth mark
Yeah.
is here. Second mark, third mark, fourth mark, and fifth mark. Okay. Got this clear? Sure.
Yeah.
Understood?
Yeah.
Do take a screenshot of for this as well and see if there's any problem, any issues. Let me know about it. Okay.
Yeah.
Got that clear? Understood? Falling?
Yeah.
Sure about it?
Yeah.
So question number 13 is also done. So let's start with section number B, although we will not be able to complete it, but let's try to do as much as possible we can do for section number B. Okay, understood? Getting it?
Yeah.
Falling?
Yeah.
So when we talk about section number B, that is answer all the questions in this section as well. Write your answer in the spaces provided. Okay, so we have to write the answer in the spaces that is provided. Question number 14 is Beth provided the following information for the month ended 31st October 2022. We have all the information given for our trade payables ledger control account. So we have to make a sales ledger control account by preparing the trade receivables account for 31st October and bringing down the balance. So it is good that you will understand the format here as well. It is basically of 10 marks. Okay, got that with me falling
Yeah.
there?
Yeah.
Because we need to understand that this is a customer account. So this is basically a debit nature. Okay. So this is a
Yeah.
debtors account, an asset account. Okay, you can write it down. So we have opening balance will be coming on the debit side. Okay. So at the start of there, we have 68,480 with me falling. So here we go. Let's
Yeah.
start. 68,480 is basically, sir, balance brought down. Understood? Got it? Balance brought down is 68,480. Getting this clear? And
Yeah.
let's start with the date 1st October 2022. So 2022, 1st October. Let me know, got that clear? Sure, no problem.
Yeah.
Okay. Now you need to be careful which items you have to take and which items you have to ignore is very important here. So let's talk about them in detail. Always remember, as I mentioned, cash sales never comes. Cash sales, you have to ignore it. Cash sales never come in the control accounts because this account is only made for the credit transactions. Okay. This account is only made for the credit transactions. Then we have contra set off. Some of the adjustments that are common are set off with the payables. So you need to write down contra set off comes here 558. That is contra set off. Okay, understood?
Yeah.
Okay. Do you know what is contra set off? Do you need explanation for that, or you got it? What is contra set off? You know
I
about
know.
it?
Yeah.
Very good. Still, I'll repeat it. It's basically when we have, you can say that this on October 31st we are doing okay. Like some amount is owing from the customer, some amount is owing from the supplier. So you set off the amount by the lower value. It is basically an adjustment so that nobody have to pay anything. Whatever the lower amount is, you set off with that. So it's like a set off in both the books, in purchase ledger control account as well in sales ledger control account. Okay. Got it. I
Okay.
have a lecture on this, so this will be recorded. So we have already recorded that on the credit side because this will reduce our debtors. Okay, this will reduce our customers. Credit sales will increase our customers. So credit sales is basically an adjustment for debit side. Okay, 56,346, 56,346 credit sales on the debit side. Okay, understood? On
Yeah.
October 30th. Okay, getting it? So this will be increasing our customers because a lot of more sales we have done. Then customers dishonored check is basically the same thing, that the customer paid the money, but due to signature issues, we can say due to insufficient funds in the bank, not sufficient funds available in the bank, dishonored check happened because the signature was not correct. Okay, the date was not correct, so the bank returned the check, and that is why it's called customers dishonored check. Okay, understanding? And customers dishonored check also comes on the debit side. Why? Because it increases the debtors. Understood?
Yeah. Okay.
So that is dishonored check on the debit side because there's again increasing our customers. Okay, understood? Got that? The
Yeah.
debtors. Okay, next next adjustment we have is discount allowed. Discount allowed, that is $412. So discount allowed will be reducing our debtors because we are providing them with discount. So discount allowed will come here. Okay, understood? That is
Yeah.
how much? By $412 we are giving them discount allowed. Okay, understood? Got this clear?
Yeah.
Next, again, as I said, that some of the things will be irrelevant, just like discount receipt, because it is a matter of purchase ledger control accounts, right? Getting it? This will be putting in
Yeah.
purchase ledger control account. Understood? Similarly,
Yeah.
sir, return outwards will also be in purchase ledger control accounts. So I'll put a red highlighter on them. So we understand that these are not relevant. We have to ignore these transactions. Okay, ignore these values. Okay, understanding? Clear on that? Following?
Yeah.
Sure about it? Got it? No problem, right?
Yeah.
So you have a couple of things left to complete this. So let's quickly do that, sir. We have irrecoverable debts. Irrecoverable debts, 100% reduce the debtors. Okay. So, sir, you have irrecoverable debts. You must know when the customer can't pay us, we have to make them as irrecoverable debts, right? Understood? That is
Yeah.
260. So we have 260 as irrecoverable debt. Understood? Got that clear? Right? Sure
Yeah.
about it? Next, we can talk about irrecoverable debts. We have receipts from customers. So when customers are paying, we are receiving in the bank, and customer is putting being on credit. So 60,940 will be credit here. Okay. So it will be receipts from the customers, or you can write cash book. Okay. That we have made the receipts. We have received payments from the customers. Understanding? Getting it?
Yeah.
You can write down bank and cash as well. Not a big issue here. On 30th of 31st of October, the same thing. Next left is return inwards. So when customers have returned, they will also reduce the balance. So return inwards is basically customers. Okay, understood? Got it? Following?
Yeah.
Once you are done with this, these all of the things are kept into, this one is taken into account, this one is taken into account, and this one is taken into account. Understanding? We have written this as well. All of the things are taken into account, and the others are removed, which are not relevant. Okay, getting it that clear with me? Following?
Yeah.
Understood? Just you have to close it down. that is basically that they are telling us that the credit balance for trade payables ledger account is 156. So you can say in a different color follow that 156 is the balance carried down for this value, okay, for the credit balance, okay, for the credit balance. So what will be the balance for the debit side that we have to calculate, okay, understanding? Clear with me,
Yeah.
following? So we can write it down, we can finish this here. And in this case, it will be the debit side will be the positive balance. So we need to get the debit side first calculated. 68,480 plus 56,342, 346, 3 plus 345 plus 156. So I'm getting 125. Understanding?
Yeah.
125,327, 125,327. So 125,327. Understood? Getting it?
Yeah.
And then you subtract it. So you will get, let's do it in the green color, that balance carried down for the next month will be 125,327 minus 558 minus 4, 112, 260, 60,940, 1224. So I'm getting 61,933. So here we go. The answer will be, sir, 61,933 here, 156 here. This is for the next month balance, 1st November, 1st November. Here remains the same. So this is balance, the credit balance. Okay. And this is basically the positive balance, the normal opening balance. Okay. That's how
Oh,
trade receivables ledger account is made. You can have a look at it, take a screenshot, and try to work it out. Okay. Understood?
yeah.
Is this clear? Got it? Sure about it? So
Yeah.
now the next thing is basically for 5 marks, so 15 marks question, explain to Beth the benefits of maintaining a trade receivable ledger account. For 5 marks, you have to write Beth is concerned about the firm, about the time she is taking to prepare. So there are some benefits of the purchase trade receivables ledger control account to be made. For 5 marks, we have to explain them. Okay, understanding. So what
Oh,
are the benefits? Let's write down the benefits. Okay, understood?
yeah.
Every year you just remember the format and you will be able to do this trade receivables ledger control account. It's not a big issue. What we need to understand that this balance is basically that we have to refund or someone customer have paid extra. So the customer have paid extra, so it's a liability, and I'm explaining this amount as well. What does this mean? This is normal, okay? This is normal. The debit balance is normal thing that the customers have to pay us in the near future, in the next month. But this is 156 basically means that some customers we have to refund them. Okay, the owner have to pay them. Okay, why? Because they must have paid extra, or there was some refund that we have to do. It extra payment or refund we have to do. Understanding, getting it, credit transaction happened. Okay, clear on that?
Oh,
So now, what are the benefits for this thing? Let me know what are the benefits for this. So the benefits
prevent.
of maintain, yeah.
Oh,
So you can
preventing
write
fraud.
down, yeah, this one you can write down this as well. So we can write down trade receivables. We can definitely write down trade receivables ledger control account, trade receivables ledger control account will provide arithmetical accuracy. Okay, it provides arithmetical accuracy of the ledgers. Okay, so you can check your numbers whether the totals are right or not. So it provides arithmetical accuracy of the ledgers. Understanding? Arithmetical
Yeah.
accuracy of ledgers. Okay, whatever point you said, you can write that as well. It helps from preventing errors and fraud. It helps from preventing errors, getting it, and detect
Yeah.
fraud from preventing errors and detect fraud. Understood? Getting it? You can write this point as well, and
Mm.
detect frauds. Okay. Then we can write it provides the total balances of our customers. It provides total balances it provides total balances of credit customers. It provides total balances of credit customers, irrecoverable debts, how many customers are not going to pay us, how many loss we have. Understood? And
Oh,
how much is the return inwards as well? How much total of return inwards as well is there? Okay, understood? Got it?
yeah.
It
Yeah.
provides to it try to detect fraud as getting it clear with me, and it will give us the total value of the arithmetical accuracy, provide total balances as well, following. So
Yeah.
maintaining of it will provide us more benefits. So these are enough points. 1, 2, 3, 4 marks. You can easily get 4 to 5 marks by writing this. Try to explain it further as well. Okay, understanding? Clear on this?
Yeah.
There will be more benefits of preparing control accounts. You can write those down as well. Okay, think about it and write down more benefits. What are the more benefits of control accounts? Okay, I'll share some notes as well, theory as well. So we can write
Oh,
down more points from there as well. Understood? Got it? Hello?
yeah.
Clear? Okay.
Yeah.
At the moment, I can think these are enough as well. You just have to explain a bit more. What we can do is we have done till question number 1 till 14. Okay. As you can see, and from 15 onwards till we have to go till question number 18 or something. Yeah, question number 18, we'll do it in the next class. Okay, understood? Got that? Clear?
Yeah.
Following 15, 16, 17. So we'll finish, we'll stop it here and we'll continue in the next session. Okay, thank you.
Oh, okay. Thank you, sir.